We see markets like Toronto being categorized as some of the least affordable housing in the world, or overheated, and it ends up playing itself into these metrics that people look at and say, that's not a good market. That's a bubble. I mean, this is where these words come from. They, in my opinion, they originate largely from lack of affordability. Good morning, investors. Bradley here from Watson Estates, and you're listening to the largest, fastest growing podcast for Toronto real estate on iTunes, Spotify, and Google Podcast. Friends, I'm so glad you could join us today on the show. As a broker, investor myself, I like to keep track of what's going on in the market and put it together, share it with you guys. Hopefully you guys learned some stuff today. Today, what we're going to talk about is how much money you need to buy a house in Toronto, specifically how much money income-wise, how much down payment do I need to save, how long is that going to take? And then I want to discuss some emerging trends we're seeing play out in the last month's stats, give you a bit of a teaser on what happened last month, and talk about what's going to come through the rest of 2021. If you haven't already, please subscribe to our channel. I know that you guys like to jump in and listen, but please hit the subscribe button. Like if you're listening to us on YouTube, hit the like button. And I'm curious for comments as well, what you guys expect will happen through 2021. There's a lot of moving trends, right? We got interest rates, we got immigration, we got the inflation that we're seeing that's happening play out all around us. We got increasing prices, we got rent rate changes. Curious to see and hear from you guys on what you see happens next. But before we start talking about the cost, how much money you need to be able to afford a house in Toronto, I want to give a little bit of context. For those of you who missed our episode before the last episode, 249, it was called Toronto's Millennials Own More Rental Properties, but read between the lines. The whole idea there was we were talking about this idea that millennials are better at investing. They tend to have statistically more investment properties than their older counterparts. Well, what we described there, and if you missed that show, go back and listen. You'll learn some stuff there, and it's a really good conversation. But the real story that I believe we see playing out, the explanation here is there's a real solid wealth transfer that's happening. Maybe the greatest wealth transfer in Canadian history. Millennials and renters are finding themselves absolutely stuck. Much of the news is just selling headlines, which we saw in those ones, and here's how I look at it. I like to look at things a little bit different. Dentists, right? They make their money from bad teeth. So why should I use the toothpaste that 8 out of 10 dentists recommend? And so I like to look at it from a different perspective, kind of give us a full picture. Hopefully you guys are reading these articles as well. If you're not, then we give you the context on it and then discuss it further. But all of that to say, the headline, or at least that headline, was suggesting millennials are in a far better position. Maybe they're smarter, they're more savvy, they want to invest, which I agree. There's a good knowledge pool that's growing in the younger age groups where they're looking at housing, they're looking at real estate differently than some of their older counterparts. However, I do believe that we have in that article, severely ignored what is actually happening, and part of the story is a lack of affordability, which brings me to our article that we're going to start off talking. There's a few articles we're going to cover today, but starting with a BlogTO article that's called, very similar to our podcast title, Here's How Much Money You Need to Make Per Year to Afford a House. Starting off, imagine a Toronto where incomes of regular people rose as fast as housing prices. Wouldn't that be nice? I mean, that I think should be the case. Where young people weren't forced to sink most of their money into a landlord's boat payments, right? Talking about all the money that's collected from the landlords. You just kind of pass it on to the renters. And newcomers could actually live within an hour bus ride of where they work. Talking about commute times. But I love this last part. In a country where renters didn't inadvertently launder cash for rich tax evaders from other countries. I love that little plug. It's just like money laundering. Bah! We don't talk about it on our show, but I thought, you know what? This may be a good chance to kind of speak a little bit about that. There was an article from ottawacitizen.com called Money Laundering is Pervasive, but Little is Done About It. As a real estate person, as a salesperson or a broker, in our industry, we are required to fill out FINTRAC forms, identification forms, and track. The lawyers do it too. We all want to know if there's major money moving. The government wants to know that it's being used properly, that there's not money laundering happening. Well, so it's one thing to collect that data. It's one thing to kind of pool it all together and track it. If there's something suspicious, we are required to disclose it to the government, say, hey, something's suspicious, or they're doing a transaction on behalf of a third party. Things are a little, just you kind of flag these things. So they collect all of these flags. Well, here's what the article says. Over the past 10 years, Ottawa area banks flagged more than 10,000 suspicious transactions to Canada's Financial Intelligence Agency. But during the same period, only 20 people faced money laundering related charges in the city. Are they false flags? Are they maybe just kind of being reported, but they're not actually the case? Or is there maybe an issue in addressing the laundering or the suspicion that we have in our industry? They say the vast majority of Torontonians who weren't born into old money can either somehow significantly boost their incomes, continue renting forever, or leave the city. So going back to our Blog TO article, it really leaves us with a few options. Either I'm going to get money from my parents, which from my perspective of having young kids, I'm pretty much expecting that I need to support them, at least if they're going to live anywhere here, or I need to be flexible enough to follow them or let them, what's the saying? When you fall in love with someone, you either let them spread their wings or you break it so that they can't fly away. Anyways, in my case, I just get this sense of I'm going to be responsible for my children entering the market. And so I need to prepare accordingly today, or they need to, as we're seeing right now, leave the city. So what is the ultimate number? How much do you need? So that person, my child, whether I'm going to support them or they're going to do it themselves, how much money does that person need to buy a house? Well, the National Bank of Canada's latest housing affordability monitor tells us someone would need an annual household income. So it could be 1, it could be 2, maybe 3, for goodness sake, out of the house that's on title. This is another thing that I'm noticing in the lending community. If you're going to count their income towards qualification, they need to be on title. You can co-signing is, I'm not seeing a whole lot of co-signing. You can support them in other ways like credit. You can kind of back them without having to be on title. But title is, and maybe brokers can pipe in here, but when it comes to income, I haven't seen any brokers, personally, mortgage agents, that will not expect them to be on title for the purpose of income. So you're going to put all those people on, and the number is right now that they're saying, National Bank of Canada, is nearly $200,000 to afford an average detached house in Toronto. Now I want to break down what is a non-condo and what is a condo. What are the numbers? Because they are different. They get into a little bit of specifics here. So for non-condos, an average price they used, and they used the last quarter, Q2. The numbers they use is just shy of 1.15 million. The household income is 196 and change. It's actually 197,000, just under 200. For a condo, the average price that they found was 652,000. Very much different. There's a very big spread right now between detached and condo, historically speaking. But at the same time, the household income is also far less, 131,000 with the combined income. So we'll talk about what trends that means, but they go on to say, ominously titled, the report from National Bank was titled, Housing Affordability Worsens by the Most in 27 Years in Q2 2021. The report states that conditions deteriorated in all 10 markets surveyed during the second quarter of 2021. Affordability deteriorated. It's not getting better. It's not things are improving. Things are actually getting worse fast. We saw a lot of these similar problems when we look at some of the data in 2017. It looks far more like 2017 than it does 2019. 2020, definitely. With Toronto posting the highest drop in affordability. So on a quarter by quarter basis, Q1 to Q2, both condos, this is just some of the data they use. And we're going to get into, in my next podcast, I'm going to cover some of the TREB stats for last month. So it'll be more specific, but they use some rough numbers for their calculation. Both condos and house prices jumped. Condos went up 5%. House prices went up 7.1%. And on an annual basis, house prices shot up, we've seen this, shot up 16%, also surpassing the index's mean increase of 14.8. So it's growing, and it's growing faster than it has in the past, even when we look at the index, which is specific to housing segment. Well, how does that play? 15, 16% increase in prices. How does that play compared to our increase in income? And I know you guys are probably rolling your eyes. It's definitely not even close. You would be right. In fact, it's a slight 0.9% rise in the median household income. That's less than 1%. That's less than 1%. Think of the spread. You can see the affordability absolutely detached and happening very, very quickly. And it's not like we have a lot of room. It's not like we can just keep going at this pace. Because guess what percent of income is going to mortgage payments right now? And this, I guess, plays also into a lot of these trends. And hopefully, as you guys are leaving comments on what you think is going to happen, the debt ratios, the debt to income ratios nationally and personally is excessively high in Canada. Right now, 61.3% of the median pre-tax household income in Toronto is how much goes towards the mortgage. I'll say that again, 61.3% pre-tax. Pre-tax. You haven't even been taxed yet. And that's way worse, okay? The Canadian Housing Mortgage Corporation, the Canadian CMHC, currently classifies affordable at 44.8%, which at the pre-tax level would be less than 30%. Less than 30%, and here we are at a nice healthy 61%. So there's not a lot of room. It's not like what we're going to do. We're going to push 80%. We're already quote unquote unaffordable from in the eyes of the Canadian Mortgage and Housing Corporation. Well, what income then is needed to afford a house? So there's not a lot of room to go. Affordability is really tight. So we see markets like Toronto being categorized as some of the least affordable housing in the world, or overheated, and it ends up playing itself into these metrics that people look at and say, that's not a good market. That's a bubble. I mean, this is where these words come from. They, in my opinion, they originate largely from lack of affordability. So what income is needed if you want to afford the house? Well, so $196,000 for non-condos. The down payment, so it's two components, right? We got income and down payment. The down payment, I think, is what's hit a lot of the headlines. And so we're going to talk on the non-condos. So everything except condos or detached, low-rise, semi-townhomes. Right now, 318 months. If you were to save 10% of your income. Now, good for you if you can save 10% of your income. I think that is, in my opinion, as someone who loves to invest and is kind of in that, I think you should at least be doing that. But I do believe, from what I'm seeing, I would be shocked if people on average save that much money. I really don't think they do. But if they do, if they can save 10%, it would take them 26 and a half years to buy a non-condo in Toronto. A 9-to-5 post office job just does not cut it anymore, which is fine because it's not about the money for them, right? It's about sending a message. Well, real estate's also sending a message. So what about the other side? That's the non-condo. That's the expensive, well over $1 million on average house price. What about the condos? Maybe I'll just buy a condo, right? Well, here's the numbers. Average pricing for a condo, just over $650,000. We talked about that. Average income, $131,000, which is still a healthy income. More likely than not with two people. I mean, great if you can get it for one person, but I think the majority when it comes to average income would probably mean at least two people on title for the property. And the down payment drops significantly less. 56 months, which works itself out to 4.5 years. So if you save diligently, housing prices stay nice and flat for us. They don't go anywhere. My job maybe increases a little bit, but I'm okay if it stays flat and I save at least 10% in less than 5 years. I, and hopefully my partner to be, will be able to save enough to buy a condo at today's Q2 2021 prices. But where do you think people then are looking right now? Where do you think we're going to have the most interest, the most buyer demand in our market? Of course, talking about trends, condos. Condos been left behind a lot in 2020, are making a bit of a tear right now into 2021. And I think we're going to see a lot more of those stats as they come out in the next couple days from Treb. But I also have some early stats that I'm going to share with you right now, talking about the condo space. Because naturally, if you don't want to leave because my company's going to open up, I need to be in the city, I'm thinking about a condo. Or if not live there, I'm seeing the opportunity in the condo space. I'm thinking about buying one to rent it out. Rent rates are going up. Sounds like a potential opportunity for me, for my investors, whatever. Well, here's some early insights into July. There's more detail obviously on the way, but urbannation.ca talking about new condo sales, pre-construction. Right now we have lots of new inventory and a lot of people have said, you know what, condos are going to struggle. 2021 is going to be a bad year for condos because there is so much inventory coming on. Same with the rental apartments. There's so much purpose-built rentals coming on. And this has been a big argument for advocates who believe the condo market will struggle. Well, that's true. We have a number of new condos under construction. In fact, we are at 10% year over year, which is a record high number of new inventory coming on to our market. But guess what? The demand is massive. Huge. Listen to some of these statistics. Looking at the GTA, there's over 9,000 units in second quarter of 2021, which I know maybe doesn't mean much to you, but that is 5.5 times higher than the sales during Q2 2020. Now, of course, Q2 2020 was a bit of a crapshoot because we had this little thing, which you might have heard of. Anyways, it was a virus, but anyways. And it nearly matched, though. So 2020 out of the picture, it nearly matched 2019 as far as the number of sales. The 905 area led the way with 58% share, which I also find to be interesting. So we still have this kind of fleeing from the city, but still drawn to condos. So a lot of these trends that we're discussing in Toronto also apply to neighboring cities in the condo space and what they're able to offer as housing prices is increasing so quickly. But one of the things that really strikes me about these stats is the absorption rate. How many of the units being created are being picked up and purchased, right? They're ready to go. They're being bought. We have reached a record high in 2021 at 81%. So 4 out of every one of these buildings that are being built are absorbed. They're being picked up by the market, which is extremely high, very, very high. Across the GTA, new condo markets, unsold inventory actually declined 10% year over year. That's an 11-quarter low and 23% below the 10-year average, just to kind of put into context how quickly these things are flying off the shelf. The president of Urbanation, the one who's kind of running through some of these numbers, here's what he said. I thought it was written beautifully. Here's what he said. Very nice. The second quarter showed that the GTA new condominium market not only fully recovered from COVID-19, but also returned to near record high sales volumes. The 905 continued to be a driving force as developers and buyers have shifted to more affordable locations of the region. So affordability being the draw, right? The affordability is a big draw, which has been the case for a long time, but no more than it has now. Even when we're looking at some of the projections for what communities are going to outperform very quickly. As soon as COVID happened, I started noticing a lot of them, Money Sense specifically is the one that comes to mind. They start talking about cities that have opportunity as the ones that are most affordable, have the best jobs, highest income relative to prices. So big draw. With inventory approaching a 3-year low, expect further upward pressure on new condo prices in the near term, he says. Convenient. Prices are going to go up. What an easy statement. Didn't take much thought on that. So let's look at the market as a whole. I want to give you a little bit of teasers before we get into the trends. I want to talk about the trends too, but I want to give you a little bit of teaser of what we're expecting. We're going to hear from Treb in the next couple of days. It'll be interesting to hear how they spin this, but we are seeing a summer slowdown, which is regular. A lot of people who look specifically month over month, they miss this. And if you followed our show the last couple of months, we've talked, it's going to be a boring couple months. Hopefully. If it's not, you have a problem. But we have. When we look at the numbers, these are obviously unofficial. This is from Scott Ingram on Twitter. Freehold sales are down. That's detached, semi, and row or towns are down 25% month over month. Condo apartments and condo townhomes are down 7% month over month. He says his houses are much more seasonal than apartments, hence why you got a bit more of a fluctuation. That is outdoor curb appeal, family school considerations, those kinds of things. But those are numbers that I like to see. I like to see things slowing down as we start to round into the fall. We start to talk about September, October. Even I'm hoping August is a pretty quiet month as well, but we'll see. It is slowing because of, I guess the question is for you, is it slowing because of season, or is it slowing because the costs are getting so high people just can't afford? Maybe this is like we've reached this new plateau. Homes now cost the same as they do in around the world, like the highest markets, like Brazil. A Brazilian dollars. I don't think Brazil's in the top 1,000. Anyways, moving on. So here's what the article's take was, and I'll give you my perspective. So here's their summary of how this all works. Long story short, people looking to buy homes that aren't condos in Toronto need to be increasingly moneyed to make that happen. Wealth transfer. Let's talk about that. Small downtown units may be increasing in supply, but so too is demand. And houses, ? With backyards, get out of here. And they say, no, literally, you need to get the heck out of here. So if you're looking for a house, has backyard and space, you got to leave. Where are you going to go? I mean, we're watching these prices of these suburban communities rising so fast, but yet months of inventory, they seem to continue to come down. And that, I think, is playing into this kind of rapid appreciation that we're experiencing. So here are some of my thoughts, some of the big trends that I get from this article. Obviously, I got a million thoughts in my head, but here are some of the ones that I thought I would leave you with as we wrap this show up. Number one, I believe we're going to continue to see the exodus play out. Big draw of this being affordability. Yes, Oshawa costs a lot of money. Yes, Simcoe costs so much damn money, but Toronto costs more. And so I think that will naturally continue our exodus. And even before COVID, we saw that outward spread take place. This is not a new thing. The problem is we need the immigration to infill, to fill in or have that net increased population in the city. But I believe you're going to continue to see that. As that happens, we're also seeing very low, historically very low months of inventory in those communities. The other thing I'm seeing is Toronto will be looking more at condos going into the fall. I think the time for condos is close. I think when in the end of last year, there was a tear for condos. I believe there was a massive opportunity in there. People, could have taken that opportunity, and a lot of people did. Some of our listeners did very good, but I think that we might have this kind of other opportunity playing out, especially if we start to see any lull or pain happening in the detached market. That will naturally draw investors. Investors are often picking up pre-construction, which we're seeing those numbers be crazy. The price per square foot, I think, is over $1,200 or something. It's crazy high in Toronto. But all that to say, I believe going into the fall, we're going to see a very healthy market for condos, also healthy for houses, but specifically because condos have really struggled over the last couple years. We've seen kind of the ups and the downs. I believe we're going to see more of an up than down in that space. But at the same time, we also, and I guess a big part of it is we have rents continuing to rise. This month, I'm still waiting to look at some of those stats. There were certain markets that did increase. We saw this shift for a while where unfurnished units kind of took off, we're even, furnished and unfurnished. Furnished being you got everything you need, you move in, and those prices were pretty much matched. Well, now we're starting to see these unfurnished units pulling ahead a bit. And I think that just speaks to there's going to be a slow increase in rent. People are willing to move in. The short-term Airbnb, travel, fun, all that. I think that the unfurnished kind of got caught up in on all of that. Toronto right now sits from an affordability perspective for rental second only to Vancouver. And I believe that rent for the 1-bedroom, 2-bedroom, the more space, I mean, you're going to see growth in those. So what that's going to mean is we're going to have both renters or people who are currently renting or plan on renting getting, as maybe they've locked into a nice low rent rate, but now they're starting to think, I got to get into housing. Where am I going to do it? I'm going to do it in that low entry level affordability. Somehow I've saved over the last 4.5 years, or I found myself a rich uncle, whatever you got to do what you got to do. These things are going to draw those renters into that demand pool, first-time buyers into that demand pool. And we also have, as I think I've kind of alluded to a few times, investors diving into this pool because real estate, I believe, is a buy and hold plan. I love multi-units. I love the cash flow. I love the stability that those bring. But there is cowboys, right? There's cowboys out there that love to follow trends and they love to follow opportunities for growth. And I do believe we'd be ignoring, if we didn't speak about the opportunity that's maybe in condos right now, I think we'd be slightly ignorant, especially when you got a lot of people sit back and think, hey, you know what, there's too many coming online. There's not an opportunity there. But then the numbers start to get revealed in the coming days from Treb that, in fact, we're seeing a lot of success in the condo space, much like the freehold space. And if I can afford a place in there instead of sitting on the sidelines as inflation rises, maybe this is my chance to get on base. Well, if you haven't already, please subscribe, hit that like button. And again, I'm curious to hear some of your thoughts. I like to rant and share my views on what I think is coming down the pipes, but I love to hear from you guys. So down in the comments, if you have the opportunity, and also leave us a review. 5 stars, great on iTunes. Really appreciate you guys and all that you do. And I will see you guys next time with some Treb stats. Take care and keep it real.